Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within corporate filings. Today, SH.A.R.P.S Technology, Inc. seems to have gotten a little flexible with their timelines. Let's dive in and see what is really going on. Alright, so SH.A.R.P.S Technology, Inc. is filing a Form 8K, which is basically a way for companies to report major events that happen between their bigger quarterly or annual filings. The big date here is the 26th of September 2025. Now, they are calling themselves an emerging growth company. That means certain rules are a bit more relaxed for them, which can be good for investors because it means they might get information sooner, but it also means they might not have to follow all the newest accounting standards right away. Now, let's look at what is registered with the stock exchange. They've got common stock, which is pretty standard, especially with a very, very small par value of just $0.0001. That is essentially saying the stock itself has almost no inherent value at the company's books, which is common for newer companies. And then there are common stock purchase warrants. Warrants are like options. They give the holder the right to buy shares at a specific price for a certain period. It is a way for companies to raise money, but it also means more shares could come into play later, potentially diluting existing shareholders. The main story here is about a waiver and consent that the company entered into on the 26th of September. This is with some of their security holders, and these holders together own at least 50.1% of what they call registrable securities. That sounds like a specific category of shares detailed in another agreement, the Registration Rights Agreement from August. So, what does this waiver and consent actually do? It essentially waives the company's obligation to meet a filing deadline of the 29th of September 2025. For what, you ask for filing an initial resale registration statement with the Securities and Exchange Commission. Instead, they've extended this deadline to 60 calendar days after something called the closing date. The details of this closing date are tied back to that registration rights agreement. What this boils down to is that SH.A.R.P.S Technology, Inc. needed to file something important so that certain investors can sell their shares, but they could meet the deadline, so they got the major shareholders to agree to give them more time. This waiver is filed as Exhibit 10.1, and then to raise Exhibit 10.2, which is the registration rights agreement itself, dated the 25th of August. This agreement is important because it lays out the terms for when and how certain shareholders can register their shares to be sold on the public market. It seems the company got an extension on fulfilling these registration rights for some shareholders. You know, this filing is incorporating by reference another filing from August. This means that the full details of the registration rights agreement are in that previous August report. They are essentially saying, go look at that other document for the nitty-gritty. It is common practice, but means we need to check multiple places to get the full picture. So, looking at the bigger picture here, SH.A.R.P.S Technology, Inc. is navigating the early stages of being a public company. They have common stock and warrants outstanding, and they are working with their major security holders to manage registration requirements. The fact that they needed this waiver suggests they might have been facing challenges in meeting their regulatory obligations on time. This could be due to a number of factors, perhaps related to internal processes, legal reviews, or the complexity of the securities themselves. Now, what does this mean for investors? Well, extensions on filing registration statements aren't inherently good or bad, but they can signal potential issues. It could mean the underlying deal or the shares being registered are complicated. Or it could simply be a timeline crunch. What is crucial to understand is why this extension was needed and what the closing date really entails. Without seeing the full registration rights agreement or the waiver itself, we can only speculate. However, it is a reminder that companies, especially newer ones, are constantly managing legal and regulatory hurdles. From a Warren Buffett perspective, we'd want to understand the intrinsic value of the company and the potential for future earnings. This filing doesn't give us deep financial tables to analyze directly, but it highlights the company's efforts to comply with securities laws and facilitate potential secondary offerings by existing shareholders. The presence of warrants also means future dilution is a possibility, which investors always need to keep an eye on. The key takeaway here is that SH.A.R.P.S Technology, Inc. is in a phase of establishing its public presence and managing its shareholder relationships carefully. This waiver suggests a need for more time to finalize these important processes, and it's important for investors to stay informed about the progress and any further announcements regarding these registrations. Alright, that is our breakdown of this SH.A.R.P.S Technology, Inc. filing. What is your take on these timeline adjustments and what they might signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. We also have our Discord community linked in the description below where you can join the conversation. Thanks for watching. See you next time.